Low interest rates are making it harder than ever to retire early. But don't worry, it's possible. Ken Sleeper, portfolio manager for the Sierra Core Retirement Fund, has some suggestions. Welcome, Ken. Tell me, how are you navigating this low interest rate environment?
Carefully. You can't chase yield just for the sake of chasing yield. You really have to be thoughtful in what you're looking for. For instance, right now we're seeing opportunity in municipal bond funds. We're also seeing it in high-grade corporate bond funds. But again, you need to be attentive as to the quality of what you're purchasing, and then you need to monitor what you're buying so that you don't get trapped if interest rates go against you.
Well, I want to get to some of your favorite funds in a second, but right now, where do you see interest rates ending 2013? Because at the last Fed minutes, even they didn't seem so sure.
Well, I think that we can, if we believe the Fed, which I think we have to, I think the interest rates are going to be about the same until the end of 2015.
All right, so they're going to stay low.
Stay low.
Savers are going to get hurt, financial repression and all that. Which are some of your favorite funds to fight that?
Well, I think that there are several that come to mind. Nuveen High Yield Muni, Forward Select Income are just two. We use some of the PIMCO income funds. So again, these are funds that are available to the typical investor, offer good returns, and again, if you're careful in what you buy and when you buy it and monitor it, you'll be doing just fine.
What about the idea of stretching for yield? Do you have a view on high yield right now?
High yield corporate bond funds are still in an uptrend. We own those in our different portfolios. At some point, though, we think that that string is going to come to an end and we may see a decline. So right now, we're making money. We are not adding to our existing positions, but they're working for us.
Recently, a lot of people have been leaving bond funds and conservative funds like yours to go into stocks. That's propelled the market. Any advice for them?
Hang on to your seatbelts because that trend can change. Think about all the people that owned Apple. Today, the Apple stock is down over 10%, over $50, and that was something that just wasn't going to happen.
And when you hear people talk about a bond bubble because in their views rates can't go much lower, what's your reply?
Well, I think that if you're talking about treasuries, you might be right, but the bond market, the global bond market is huge. There's sectors that make sense now. Everything from emerging market debt, if you're willing to take the risk, high yield if you're willing to take the risk, muni bond funds if you want to tone down the risk in your portfolio.
Well, thanks a lot.
Thank you very much.
And thank you for watching The Street.